Hey folks, welcome back to the channel. It's Liquid here, and if you remember from a month ago, I put out a video explaining how the market had a really good run, but that's probably going to change in February, where we'll likely see a pullback. And I used this chart here, which I'll bring up here, showing the average performance of the market the year after a presidential election. And the black line is all years, and the red line is when a new party gets voted in, either of which does not bode well for the stock market in February. So I mentioned, especially during the later half of the month, that if history plays out, we'll likely see some kind of pullback. And that's pretty much what happened. This yellow ochre line represents the S&P 500's movement this year so far, and we're at the end of February. Today's the last trading day, the 28th, and it has held up fairly well through the first half of the month, but during the later half, you can see it's just gone down from there, and we're going to take a closer look at it on the charts in a bit. So over the last couple of weeks, I have been putting in a lot of these bearish trades on the S&P 500 that expires today, and you can see most of them have done pretty well with a lot of unrealized profits. This one was a bull call because I put this in, I think, at the end of last week with a 60-40, 60-45 call spread because I thought at that point there was a chance the market was going to bounce. So I put that trade in around here where the market was at 60-30. The idea being there was a pretty strong support over here because the 50 daily EMA was here as well as this upward trending line. And if the market were to bounce off of that, then the bull run would continue and we would likely see the market go higher, just like it did previously over here and over here and over here. So that was just a hedge put in place in case the market does go up, but that did not happen. As you can see, the price dropped below the 50 and it just hasn't been able to get back up there. So it's been going down for the last week and a half, except the last day today, which it has gone up. And that's why I put in these bullish trades over here. I was originally bearish for this trade here, my bear put, because I thought the market was going to go down for the day. This is the 5-minute chart. Starting from the morning here, it went up, kept bouncing off of the red line, which is the 50 EMA, but eventually when it closed above it, I believe this was going to be a trend change. So I changed my position on that, going bullish instead of bearish. And because the market did go against me up until that point, I lost $117 when I made the switch. But at the end of the day, the short spread became worthless. So I made about $121 there, which means basically this trade was break even. And I put these other bull calls in place because when the market goes up like this, you just want to continue following the trend unless it goes the other way. Picking a top is usually not a good idea, as any bearish trade after basically this point at 2 p.m. would have lost money because the market pretty much just went up from there, especially during the last half hour. So where's the market going to go from here? Well, on a monthly basis, we can see that we ended the month in February with a gravestone doji, which technically is a bearish sign. However, we need to get a confirmation candle in March, which needs to close lower for there to be additional pressure to the downside. Otherwise, it's still not certain because we had another gravestone doji over here back in October of last year. And you can see what happened the next month was the market continued to go higher because it's hard to break a trend that's been going for this long since there's already a lot of momentum trying to push the stock market higher. Another case for the bulls is going back to this chart. Again, looking at about 75 years of history. The black line is all post-election years, and it does seem to slope higher a little bit. Even looking at the red line when the incumbent party loses, which is what happened this time, again, it's also sloping higher from the beginning of March to the end of the month. Even some of these other lines, which doesn't really pertain to the current situation, but although they've finished the month pretty much either flat or down, they have at least been green for the beginning of the month at the start of March, which is also the case for the black line as well as the red line. The red line's gone down a little bit during the first few days, but by the end of the first half of the month, it does look like it's higher than the start of the month. And if this chart does hold up again, just like it did in January and February, then we'll probably see a positive month for March. And if that is the case, then we're going to look at April. And if April is also pretty good, then there's a pretty good chance the rest of the year, based on this data for 2025, is we're going to see another positive return for the S&P 500. But that's still too early to call. What I would say is at least for the first week or two of March, I'm leaning towards bullish just because the odds are pretty good based on this chart. And also from a technical standpoint, if I go to the daily chart, you can see the market has been in this bull channel for a very long time. And if I tighten it up a bit, it's basically going up in this channel. And it has bounced not once, not twice, but the third time happened this week. Actually, today, there was a bounce off of the bottom of this channel. So very likely we're going to go back up and retest at least the halfway point of this channel. I mean, that's kind of what we did last time. When the market came down here, it went up, went past the middle of this channel a little bit, bounced around, and then ultimately came back down to retest the bottom. And now we know that the bears cannot push this below the channel because there's a lot of demand here. And that's why we got this final candle for today to end the month, where we have a bigger wick on the bottom than the top, showing upwards momentum going into next week. Now, is it possible we're going to get a red bar on Monday? So it's like red, green, red. Of course, that could happen, but we already know there are a lot of buyers down here. So the most likely scenario is kind of what happened here last month, where we had the market come down, find some kind of support level. Over here, we had a green candle where the bottom wick was bigger than the top wick, pushing momentum upwards, and then we had a huge run after that with about a 5% move in the next week or so. So short term, looking fairly bullish into next week. Medium term, not too sure. We'll have to see how March plays out to know if the market this year is going to continue following this overall trend shown with this, or is it going to do something else, which means go down, and we've already seen the top. And then my longer term outlook, let's say to the end of the year, and maybe going into 2026, is neutral to bearish because I think the economy is slowing down. People are starting to run out of money, and consumers have shown with their wallets that they're spending drastically less than any time in the last 4 years. So maybe the stimulus money is starting to run out. We also have the number of people who are long-term unemployed, and when this goes up, you'll likely see some kind of recession. It's what happened every time in the past, where you have this number gradually go down, but when it goes up, it usually turns pretty fast. That happened in the 70s, 80s, 90s. And I'm not talking about the little minor ups and downs throughout each month, but when you look at the overall trend, you can see it's going down here and then very violently jumps up, goes down, and then again goes up. And then if I zoom in to a 10-year period, you can see the last recession during the pandemic, there was less of a warning. It just directly shot way up. And right now it looks like that it is trending upwards again if you look at the overall trend over the last year. If we treat this like a stock chart, then we can see there is a support down here at this green line heading upwards. So right now the number has come down a bit, but if it hits this green line again and continues to head up, then I think that's going to be the start of the next recession. But if it manages to fall below and continue going downwards, which could happen, then maybe the economy is still pretty resilient for this year. So we won't know for maybe another few months, but that's definitely something to keep an eye on. And then the final reason I'm kind of cautious for this year is because generally speaking, the market likes to make similar sized moves after a pullback. So what I mean by that is if we look at 2018, for example, where the market dropped by 20%, so that was a bear market, although it was a shortly lived one, from the bottom of that correction, which is the start of a new bull trend, to the peak before a pullback, which is this point, because the market on the weekly chart just kept going up and didn't fall below the green 9 weekly EMA until it went all the way up here. And that was one move. Then it had a pullback. And when it does have a pullback, normally it runs up another leg of the same length. So if I duplicate this arrow, which is the same length, and put it at the bottom of that correction, then we can see that it basically goes all the way up and lines up with the top of this point, which is the market top right before the last recession that we had. So this is what I mean when the market moves in twos. And since that last recession where the stock market fell like 30-something%, we had another really good run from the bottom of that bear market to 2022, which is a fairly long time, over a year. And then we had some sort of pullback where the market dipped, found some kind of base, and continued to go up. after 2022. And I'm going to make it green so it's different than the previous trend. Now, if we do the same thing and duplicate this green arrow, put it on the bottom of this correction that the market was in during that year, then we would expect that the market would continue to go up, especially once it broke out of this bear channel. It's likely going to continue going up. But if I put the bottom of this arrow over here at the bottom of this pullback, then we would expect the market to continue going up until the next pullback, which is up here at around 6,100. Now, if I go over to this side and put a horizontal line over here, you can see that's pretty much where the market is at right now. At least that's where it's gone over the last couple of months. And notice how before the market kept making higher highs, like over here and over here, it kept sloping upwards. But once it reached this purple line, which is an equal size run up from the previous bull cycle, then it stopped making higher highs. It just flatlined. And every time it hit this purple line, it just bounced off the top. So this is another reason why I think from a long-term technical perspective, there's a good chance we're going to see some kind of pullback before the market goes higher from there. That doesn't mean the bull run is over, right? Because something could happen like this. It's very possible. But this pullback here is going to be probably at least 10%. And very likely we're going to see that this year. Because whether this is the top and the market does this, or it's not the top and the market does that, there is a very hard and strict resistance line over here that the bulls have to contend with, and it's not going to be easy pushing above that. So obviously you want to remain bullish if this is the case, and it's better to take some profits if this is the case. Now, right now, it's hard to say which way the market is going to go because from an economic standpoint, fundamentally, the market is overpriced and due for a pullback. But we do have this chart saying otherwise. So for the next month, the month of March, I'm actually going to be making fewer trades just because I'm less certain about where I think the market's going. And there does seem to be a lot of contradicting information right now. So other than being bullish in the first week of March, I have to see what the price action does for the rest of the month. So that being said, I hope you guys got something out of this video. Thanks a lot for watching. Good luck with your finances, and I'll talk to you in the next one.